I'll let you into a secret, which is only going to be known to the people listening to this podcast. I coached that trader. So,
Uh,
Oh, okay.
because I worked with them,
Amazing.
and I came up with the term sniper, which is how
Mm.
I think the one you're referring to. Um,
Yes.
and I called him a sniper because a sniper, if you've ever studied.
right. So welcome back to the Edgewonk podcast. We are very happy to have Stephen Goldstein here from AlphaMind. Stephen is a top coach in the financial markets, and he has worked with hedge fund traders, investment banks, asset managers, prop firms, traders, and other leaders. He also has 25 years of trading experience at leading investment banks. And we are super happy to pick his brain today because he's working with so many interesting people. And I'm sure there's going to be a lot of interesting takeaways for our Edgewonk users or for traders in general. So welcome back, Steve. It's good to have you, and hello, Moritz, as well.
Hi.
Pleasure to be with you guys.
So I want to get right in because we had quite a few conversations already. And I want to pick your brain so bad on quite a few topics. So what mental frameworks do you see in high performance traders that beginners or intermediates often lack?
Okay, where to start? Well, one is they they often have a real sense of where they want to be going, a kind of vision for themselves. What do I mean by that? Um, a lot of people just come into trading, as I did, and as most people did. I suppose with a sense of curiosity, a belief that they can make a lot of money, a belief probably that it's not that difficult because they've seen somebody else make a lot of money, and they usually think, I'm smarter than that person, or I'm as smart as that person, or you've heard stories, or you've been inspired. And, you think, how difficult can it be? So, you start reading a little bit about it. You see a few, somebody maybe says, do this, or you look up a 5-minute YouTube video and you think, I could do that. You might even spend a bit longer looking into it. And you go from there. Most people just kind of fall into it. They sink or swim. Some start making money, some start making easy money, some struggle, they find their way. Usually people get attracted at a time where money's easy, which is not the best way, but it's when most people come into it. For example, 2020 was a great example of that. There was a lot of easy money to be made. And I was just talking to somebody this morning who went through that journey, and like a lot of people who made a lot of money in easy money 2020 years, they gave it back in the next couple of years until the whole lot went, including the money they had set aside to trade. And that's when they learned that they're not really a trader. There's someone doing trading. Very different. I guess what most people do is they don't think about what does it take to be a trader. They think, what does trading involve? And most people think, well, I need to start learning how to predict the market. I need to work out where there's value in the market, or I need to find a quick system which catches easy moves and makes money relatively easily. And they try a few things, some work, some don't. But slowly they pivot a bit left, they pivot a right, they try different things, and then they start they start making a bit of money. And then a rude awakening happens somewhere further down the line. See, the market does a thing, it sucks people in. It wants people to think this is easy. It's almost like it's playing a game with you and it's toying with you. Okay, and there's a system. Wow, there's an easy system. If I buy here, I sell there, and I put the stop there, and I have a moving average or an indicator or something, or I follow an RSI, a stochastic, or a pattern, this is going to be easy. Or if I just follow that person and make some great calls all the time, this is going to be easy. No, not at all. The market sucks you in, it teases you, makes you think you can make a lot of money very quickly. It rolls out the red carpet like a casino would, and you're in there. And then once you're in there, it takes all your money. And that's what it does. And that's what happens to most people. Most people disappear within a couple of years. They think this is too hard, or I've got no money left, or maybe I'm not good enough for this. A lot of people don't really go into trading, learning what trading is, understanding it. They might get by, they might do okay, but somewhere along the line, a realization happens to them that this is a lot harder than they think, or they're not able to do this, and they don't really learn what trading is. They don't really learn who they are, because you have to understand yourself when you're doing trading. Anyone who's ever succeeded at trading will tell you the thing they got about it more than anything else was they learnt about themselves. It taught them about their self. So if you can understand yourself better at the start, if you can understand how you work with trading, if you can understand what trading is, if you can get a true sense of this, okay, if you can develop practices and processes that will enable you to achieve that, you're far more likely to succeed. And most of the people I work with who have been successful, or I know who have been successful, have very quickly developed a set of processes, a set of behaviors, a set of mindsets and attitudes, a way of being, an understanding, a vision for their trading, a process, and have worked on being present to what they do. So it's not one thing, it's a whole series of things they do that makes them better. And they go that extra mile, because this is so hard, this job. It is so difficult to succeed. And it's a lot more difficult to succeed for an individual doing it at home on their own than someone working in an investment bank or a hedge fund, where they've got a lot of endowments and a lot of gifts and a lot of support and a lot of help, and are being paid to do the job, even if they lose money. To do it on your own is so much harder. I like to think of it as a true high performance activity. If you want to become a professional golfer, a professional tennis player, professional boxer, professional guitarist, classical guitarist, it's going to take years and years of learning to even get close to that dream. And then it's going to be practice and putting yourself out there. And only a very, very small amount are actually going to achieve that dream. Who do you know in the world of tennis outside the top 10? You've got to get into the top 10 to really make it in that world. Millions of people start in tennis. The people who go into it, and I remember one of the traders who was featured in Unknown Market Wizards, who I coached, he was an up-and-coming tennis player. I think he was ranked number 8 in the UK as a junior at some point, which tells you how good he was at tennis to get to that sort of level. And at one point, he had a conversation with his coach, who was in his early 30s. And his coach said, I'm going back to college to get a business degree and then go from there. And he thought, wow, this guy had been number 2 or 3 in the UK at one point, really promising player, but had never made it to that level to break through. And now he had to go back to college in his 30s to start his life and his career all over again. And he thought, what's the odds of me making it to that level in tennis where I can really get my life going? And then he decided to be a trader. He left that. He went to university. Didn't decide at that point to be a trader. He went to university. He decided to give up tennis because he realized he wasn't going to make it, or he probably wasn't going to make it. And he went to become a trader. But it's the same theory in trader. You have to think, how do I get to the very top? How do I become one of the best? How do I become that 1% Everyone who's starting in the retail trading game that year, only the top 1% will probably still be standing in about 5 years' time. And out of them, only a small fraction of them will go on to make a really good living out of this. How do I be that person? Think at the very start what it takes to get there. And that is an example of the high performance mindset that I see with many of the best traders.
You said that you need to know yourself and you need to know who you are as a person so that you can model your trading around that.
Yep.
And how do you find out, first of all, who you are? And then once you know that, how does that translate to something very actionable or specific in the trading world, in your trading?
Okay. Well, we all know who we are to a degree. You know, we all have a sense of who we are to a degree, but we don't know ourselves in depth. We largely define ourselves through some sort of achievements or through a story that we tell ourselves about ourselves, a story that we've constructed over 2 or 3 decades, maybe. We have this belief in who we are, and we think we're usually really capable, really good. When things are going well, we've achieved something. We probably wouldn't go into trading if we didn't think we were capable of succeeding in it. So at some point, we're very optimistic about who we are. But we overvalue our abilities significantly, and we overvalue ourselves. Paradoxically, we also undervalue ourselves when things go badly. So we're caught in this game of overvaluing and undervaluing. And what happens is when we overvalue ourselves, we think we're overconfident, we're over-optimistic. We think success will come our way. We massively increase the odds that we're going to succeed against reality. So if we go into trading, I should imagine most of us think there's an 80 to 90% success chance that we'll succeed. Probably a small chance we might not. If someone was to tell you the chance of you succeeding is 1%, you'll probably never go there. If you were aware the chance was that low, you'll probably never go there. But some people might go, okay, the chances of me succeeding are very low, much lower, maybe 50% or 40%. And therefore, I've got to do something to increase the odds of that happening. If we think 90% chance we're going to succeed, we just won't do the work. We'll just think all we need to do is learn to trade, and the gift will be ours and it will come our way. At the same time, we're often the opposite to that. When things go badly, when things aren't working, when we're unsure, we flip and we go, oh, I'm not very good. I don't believe in myself. I'm never going to make this happen. This is going to carry on going wrong. So in both senses, we undermine ourselves by overvaluing ourselves and undervaluing yourself. On the other hand, if you could really see yourself, really have a sense of where you are, a true sense of what your probabilities of succeeding are, and knowing that you want that desire to succeed, well, I presume you'll start doing the right things. Presume you'll start thinking, I need to maybe do a course. I need to do a program. I might need to journal. Hopefully for you, you will need a journaling tool. I need to read books. I need to maybe work with a coach. I need to have mentors. I need to do a proper course in technical analysis, not a 5-minute course. Because technical analysis is actually a really good way to try and understand what's happening in the markets and to find ideas. And can be really helpful. And anything that's really good and really helpful, you need to invest a lot of time in understanding it and learning it. You're not going to learn it in 5 minutes. Same with fundamental analysis, research. All the sort of things that you need to be able to learn and understand take a long time to do. But if you're unrealistic, you're just going to rush it. So learning who you are learning how you are, learning where you're strong, how you could leverage that, learning where you're weak, how you can, how that might play out and manifest in your trading, and shaping a process and a practice around those that take advantage of your strengths and work against your weaknesses. Okay, that really helps. And the more you can get to know yourself, the more you can get to see yourself, the more you can understand that real version of you, not the one you want to see, the more powerful you will become as a trader, the more likely you are to succeed, the more deeper your understanding of the world around you. I don't know if you can see on the wall behind me, I have certain influential articles and documents on there that I think are really important. One is a painting by the Belgian artist René Magritte, and it's a man looking in the mirror and seeing the back of his head. And that's what happens. Most people look in the mirror and they don't see their real selves. They'll see a vision that maybe not the back of their head, but a version they want to see. The more you can really understand yourself, the better you can adapt yourself to the realities and challenges of trading.
That is a really deep answer. Thank you. I actually just wrote a tweet about that kind of topic where I said that if traders really want to have an edge in the markets, then they need to be in love with the process they are doing each and every day. And then they can only be in love with the process if that process really fits their personality traits, their strengths, weaknesses, and their belief sets, etc. So that was something that I struggled with a lot personally in the beginning because I was so returns biased. Like the only thing I thought about was, okay, I want to make 200% a year and I don't care about anything else. I don't care what the process is. If I have to sit in front of the screen 10 hours a day or 1 minute a day, I don't care about the strategy, how long I hold the trades, the win rate, etc. I just want those 200%. I was so focused on that I could never have succeeded if I didn't have that mindset switch eventually, where I then said, okay, I actually don't want to sit in front of the screen 10 hours a day. I just want to sit here for an hour a day or 1.5 hours a day and then trade the volatility at the market open or so, etc., right? So when I built my strategy from that perspective, I was way more likely to succeed than simply looking at, I want to get rich quick.
Absolutely. You were talking about an outcome focus. You know, the
Yes.
enemy of success is having an outcome focus. Okay.
Yes.
You know, results driven. I talk often about trying to lose the binaries, trying to lose is this good? Is this bad? Did I win? Did I lose? Am I successful? Am I a failure? Those are all binary concepts which are outcome focused. Okay. All of them will take you away from process. It's your process that is going to give you your long-term victory. And just play around with this for a minute. Imagine you had a process that won one trade a year out of 100 trades. Okay. And 99 trades don't win, of which roughly half lose and half are break even. And half those losses are, say, 1R losses. Okay. But say that process, and I'm just being theoretical here, has that one win that wins 100R. Okay. So your return over the year will be about 50R. The 100 wins against the roughly half 1R losses. It's the process that matters. If that process happened every single year, you would make a lot of money. But the journey would be horrible because you don't know which of those 100 trades is that 1R. It might come after 10. You might get 2 in 1 year and none the next. So you don't stop after the 1R. Okay. You might stop if it's the last trade of the year. You're 99R, lost 50R, 45R so far. I'm not going to do it because this is going to go wrong. You don't have the selection choice. You have to do it. Most people can't do that. Most people can't sit with that patience. Now, a lot of processes are like that, obviously not nearly as extreme. We don't know which one is going to be the winning one when we take it, but we have to stick to the process. We have to cut it at that point, and we have to run it, which is much harder, because if you take the profit at 50R, all you're doing is breaking even. If you take it as 60R, okay, you might do that, but what if you have to wait nearly 200R for the next one? Because we don't know when they're coming along. You might make one on the first day of the year, and the next one on the last day of the next year. That's almost 200R. So you would have been bankrupted after 2 years if you took the profit at 50R. I'm using very extreme examples here for emphasis. But most setup approaches, which most private traders do, most retail traders do, are formulas of that, similar to that. You may have a switch where they have a high win rate, but larger losses. Not something I advocate personally for retail traders or setup traders, but that is an example of that. And that's why you need a process. If you sit there and you have 10 losses and you think, I can't take this anymore, I have 10 losses, I'm a failure. You've gone into the binary and away from process. And I see that all the time. I've been there myself. I've experienced that. And one of the ideas I came up with my own trading was I called it the London buses strategy. Because when I was a kid, London buses were notoriously unreliable. And, you could wait ages for them, and then 3 would come along at once. And you had to decide, was I going to leave the bus stop and walk to a different route, get home, and then the buses come along, and then you've just missed them at the next bus stop, and you have to come back, which sometimes is like trading. And for me, I had to trust myself that, I might have to wait 1 month, 3 months, 6 months, but a bus will come along, and maybe 3 of them at once. The trade will come along, because I've got a process that over time selects winning trades eventually, but they're quite sparse.
Just quickly, there are some processes that if anyone told me, or like there was this one guy in Market Wizards, Unknown Market Wizards, that he didn't trade for 250 trading days. He traded maybe 5 of those days while he was sitting in a prop firm office, and the traders around him were busy trading every single day, and he was just sit there, wait, and he would make, I don't know, 200 or 300% ROI at the end of the year with those 5 trades, because they were such killer trades. But if you would ask me to follow this process, if you told me at the end of the process would be 5 million US bucks, I would tell you I can't do it. Like, I don't want to do it because I would feel so miserable in the process. But this guy, wow, like he's like a monk to me, right? But just shows the power of process and fitting it to your personality. Yeah.
I'll let you into a secret, which is only going to be known to the people listening to this podcast. I coached that trader. So,
oh, okay. Amazing.
And I came up with the term sniper, which is how I think the one you're referring to.
Yes.
And I called him a sniper because a sniper, if you've ever studied snipers and military, sort of been in the military, a sniper sits there hidden and waits and waits and waits and waits. And the target may be in their sight, but they won't necessarily take it because they have to also get away. And if taking the shot reveals their position, they're dead. So they have to wait for that one moment to take the shot. And that gets them out alive. He has to wait for that one perfect setup. Not perfect, I'm using the word metaphorically, but that one ideal setup where He can get in and get out quickly if it's wrong. But if he's right, it's off to the races. It absolutely takes off. And I've worked with people like that make an absolute fortune. But it's not an easy journey. And I've worked with people who do that, who lose patience and hop to another system. It happened with someone this year, actually. And then when a big opportunity came along, they missed it. They were caught the wrong way around on it. That is a really, really hard thing to do. But then, he was an elite performer. I knew the routines he did behind the scenes to prepare himself, his mindset. He was a voracious journaler, by the way. This was a guy who had to really know himself, had to really understand himself, and had to work with himself and on himself the whole time. And, he was extraordinary. But it's not, this is where I talk about being. It's not easy to be like that. And I talk to a lot of people and I say, if you decide that you're going to do a certain style of trading and trade in a certain way, and I talk about this in my book, you have to make a bargain with yourself at some point. I'm going to trade in this way. This means that I may go through long periods of not making money, or I might trade in another way, which means I'm going to accumulate a lot of small wins, but every now and then I'm going to suffer some big drawdowns, and I've got to accept that. I've got to accept that this is going to require my total attention. It may be that you've got to accept that I'm going to miss a lot of trades, and I've got to be okay with that, because a lot of trades that I miss will, and I had this with someone recently, he was a very good trader, but everyone gets caught in the FOMO situation every now and then, where he didn't like a particular stock and decided to pass on it. And then somebody else a few weeks later mentioned this stock and said, you've got to get on board with this. And he decided to yield and bought the stock. And what happened to him was he sat with it for a few weeks. It didn't go anywhere. It lost money. He lost patience. He cut it out. And then a few weeks later, it soared. And he would have made a lot of money. The failure wasn't the cutting out, which is what he thought it was. The failure was taking a trade outside his process. This is why process is so important. Because he said that if he'd have not bought that stock as his own analysis has suggested, he wouldn't have had any problem when it soared, because that was a choice he made. When he did the rather silly thing of listening to somebody else and buying it just because they bought it, that was the mistake. Because when that doesn't work out and you just sit and it goes against you, you lose patience very quickly, because you don't have the story behind the stock. You don't have a process behind it. So you lose faith in it quickly and you cut out. Whereas this individual wouldn't have lost faith in it because he had a story, he had a plan for it. But the problem wasn't that. The problem went back further to the fact that he shouldn't have taken somebody else's trade.
And at least he didn't get rewarded for this bad trading behavior, because I've seen that if you then end up with a winner, then you think, oh, that's the way to go. And then that leads you down to a very bad road usually.
Absolutely.
So this requires a very, very deep understanding of not only yourself, but of the strategy itself that you are choosing or building, because you need to know the setup frequency, the holding time, the size of average winning trades, losing trades. And then you need to make sure that this is modeled to your personal makeup. On what patience level do you operate, and all of those things. So in the beginning, you don't know that. Should you go through different strategies in the beginning to find out what works to get an idea? Because in the beginning, traders don't know how different strategies feel. What is your advice there?
I think most people start feeling their way into what works for them, what they feel comfortable with. So I don't know, there's always going to be, it's very unlikely you're going to pick the first strategy that's going to be ideal for you. That would be rare. I've kind of referred to two people I worked with previously who are now two in Market Wizards books. And both of them were taught methods and approaches that they then adapted and evolved to who they were and to their situation and context. So they both worked differently, having been taught the same system, and neither of them did the system they were taught. They evolved it and adapted it, and they both worked out using things that worked for them. I don't think either one of them would have been able to make money with the other person's system because they had to find something that worked for them. So that was really important. So I think to a degree, everyone does that. It's not just the system, though. It's also, there's a lot more to it. It's the reality of who you are and how you are, the reality of your situation. A lot of people don't think about this. For example, if you want, like I say, there's an overestimation of how quickly you're going to make money trading. So if you think I'm going to make money within a year and I'm going to be earning £100,000 on my £20,000 starting capital, within a year, you're just not being realistic. And then if you were to be realistic and think, I say to people, don't plan on making money for the first couple of years because you're going to just put yourself under pressure to perform and to get results rather than learning it. But then what happens if you can't put food on the table? What happens if your girlfriend, your wife, or whoever says, you've got to go out and bring some money in. I'm not supporting you anymore. What happens if you don't have enough savings? What happens if you can't pay the mortgage? Or you start thinking, I've got to make money to pay the mortgage. As I mentioned before, you have a process and you don't know when your process is going to deliver. But if you need to have a monthly income from trading, and you're starting with a meager amount, a small amount, you're using a process which is erratic, none of your reality is not going to allow you to become a trader, not the trading strategy itself. The trading strategy itself might be very sound, and you might be quite capable over time of making it work. But your reality is that you're not going to be able to stay in that seat doing that for a long time or at all. So it's another thing is aligning your context of who you are. Nearly everyone has a stakeholder, usually a wife, a partner, a girlfriend, a boyfriend, people that rely on them to bring in an income. In a way, the company that lends you the money to buy the house is a stakeholder. Maybe a prop firm that gives you money to trade, they're stakeholders. Everyone, in a way, has a say on what you're doing and how you're doing it. And quite often they can restrict your freedom. You've got to always start looking at, as your situation. I do see a lot of people giving up on trading who with time would probably be very good traders, who could probably make a lot of money, but they just don't have the resources or the setup or the context to be able to make money. And I think, again, this is another part that's poorly understood. Again, I personally, it is very hard to get in there. But then I do see people who do it. In fact, I just told you afterwards that I'm working with someone who's a retail trader in your part of the world, who's an astonishing retail trader, fantastic. Has worked for many years in a job, built an income, started, after a while, started studying training, almost did what I described before. He wanted to learn what it was. And then he started doing it in a small way, whilst he still had another income. He never committed fully to it. And over the years, he learned how to do it whilst working, slowly improved, started earning money, eventually left his job and thought, I've got enough money to live on and I can build my capital. And he's one of those retail traders who has made it, and he's brilliant. And He can survive the setbacks when they come along, which is another important thing, because everyone suffers setbacks. Markets don't always work out the way we want, as I'm sure you know, and your listeners know. But you have to be able to survive those as well and come back. And he's got all those things in place. So everyone, I think, can do it. There's a system, a method, a strategy for everyone. Just need to have the resources and the situation and the context. And by the way, journaling is one of those brilliant tools which, I think everyone who works for themselves should be doing, and doing seriously, to support their growth and catalyze it to go faster.
Yeah, I see it quite often. I do those Edgewonk reviews where our users can send me their journals and I go through them. And it's really eye-opening to see a lot of traders. There are obviously very different kind of traders. There are traders who keep repeating the same things over and over, and they know they're doing the same bad behavior and they write about it, but they just can't get out of it. And that's often quite interesting to see, because they cannot break out of this cycle. I'm not sure what is driving them. It's just, I don't know, it's stuck. They are just stuck in this loop that they can't break out of.
Yeah, that's the death spiral. It will eventually kill them. Something has to change. So either something in their philosophy or approach to trading is not right, or something in their process is not right. Something earlier that's part of what they're doing. It's manifesting itself in what you describe. And either they're not willing to change, or they can't change, or they won't make the changes, and they'll just keep repeating it. And eventually, it will chip away at their confidence and their self-belief, and then that'll become a problem. So they've got to go back and probably make some sort of wholesale adjustment to their trading process in order to sort of get ahead of that. Or it may be that that's just a feature of their process. And maybe they're actually making money, but maybe that happens every now and then. And that doesn't, again, if you've got a process, let's say, that returns 25% a year, but you keep seeing these kind of what you would describe as errors happening along the way, well, maybe they're just part of their process, and they're going to have those, because at the end of the year, 25% return is really good and can earn a lot of money compounded over time. And you've just got to accept that, that is going to happen sometimes if it's part of the process.
What is so eye-opening to see on those reviews as well is that traders have those trades where they follow their rules and the strategy is making money, but then in between those good trades that don't come around that often, they lose everything. And in Edgewonk, what is cool, you can filter those out and you can see, okay, the core strategy is making money, but in between, you are the one who is messing it up. And I've had 2 or 3 email exchanges with users who then said, wow, I was not even aware that I'm the problem here. The strategy is actually the thing that is working as it should. And I'm the one who's messing it up, and bringing this reality to your trading and seeing it, that you are the one who needs to work on, or your processes or whatever it might be. That could be such an eye-opener for traders that I've talked to. Yeah.
That's how you get to know a lot about yourself. It's and again, it's something in my book I talk about called behavioral slippage. Most strategies, I think, if they're sound, and if you were to have the ability to backtest them, probably have a positive expectancy over time. But most people aren't able to monetize them because of who they are, because something within the way they work, their psychology, their beliefs, their philosophy, something is happening that's stopping them executing on that strategy fully. And that then says that the problem is them, not the strategy. Unless the strategy is just not congruent to who they are, which is again part of that personality thing. We can end up using strategies that we just aren't able to place because it's too different to our personality. It's what I call the badly fitted suit. And it's a beautiful suit, but when you try it on, it doesn't quite fit you perfectly. You shouldn't be wearing that suit, even though you look at the suit and you love it. So there's no point. You just look daft going out on it. and you won't feel comfortable and you won't be able to move. A lot of strategies are like that. That's where people are using the wrong strategy for themselves.
Right.
What I have found for myself personally is that I can trade strategies that don't fit me very well if I have a strategy that fits me very well in the process. So, for example, I come from a poker background, and before that, I was very much into video games. So basically, I had to set up my trading like a video game, where I get trades every day, etc. And I have a swing trading strategy running in the background, which I could never trade on its own. If that was my main strategy, I could never trade it because I would not have the patience to wait for the entries and just sometimes 2 or 3 weeks no action, right? But because I'm having constant action every day with my day trading, I can run that strategy in the background, knowing that I will get my action today when the market opens. So that was another very huge eye opener for me. So I can generate some extra alpha.
There's a great example of a strategy that doesn't fit someone's personality. You've got a personality which I would categorize probably as excitable.
Yes.
You like novelty. You need those things to keep you motivated. Without that, you're just not motivated, and you lose interest, and your interest wanes. Whatever we do in trading, we must align it to some aspect of how we are that keeps us motivated. So someone could come along, like you said, for example, you gave the example of a sniper strategy. It's just not going to work for you. It might be brilliant, but you're going to be going out your mind. So it just won't work for you. But there are other strategies that will. You're probably at your best when you're buzzing somewhere along the line.
Absolutely, yes.
You need a lot of volatility in the market. You probably, and I've worked with people who are like you, and when there's high volatility in the market, they are absolutely smashing it. When things come down and go quiet away, they're giving money back.
I know that.
So it's kind of like, learn to leverage those moments, but also find out about yourself. If you're like that, you're probably a highly intuitive individual. You probably see things first. And trying to understand that, because a lot of people see things and then they don't back themselves to put them on, and those things work out. So then having a strategy that actually, I'm going to back that. And you have a stop limit, obviously, because nothing's guaranteed. But playing with who you are becomes your edge. Again, one of the very best traders who I worked with, and he worked for a bank. He was German actually as well, and he was just an incredible foreign exchange trader. And he may have been the most intuitive person I ever worked with as a coach. And I always remember him telling me that how he traded, and I thought, that's impossible. No one could trade like that. He would just look at the prices, not even the charts, and he would just look at the patterns in the movement of the price. The numbers. He would watch, say, three, a set of three. So in foreign exchange, dollar yen and euro yen gives you euro dollar. If you match the two off, you're left with a euro dollar. So he just used to watch the price action in the market, not looking at charts. And he just knew intuitively when something was happening that was going to leave him with a trade in the other. If he hit two of them, he couldn't even think about it. He just had to do it. It was so intuitive. He couldn't tell you it. He just had to do it. And he made a lot of money, but he couldn't tell you what he was doing. He just had to act it out. And he couldn't just do it in a single currency one. He couldn't just do it in dollar yen and stay in dollar yen. He had to create a dollar yen through the euro dollar and the euro yen, which equated the two, which doesn't make any sense until you realise that aided his acute pattern recognition abilities. And I've heard of people who do that with online poker.
Yes.
But they can only do it for so long. They can't do it for hours. If they do it for hours, they'll start giving all the money back. They might be able to do it for an hour or two. So gamers are very similar to that as well.
Totally, yes. Yes.
You get people who might prefer strategy games against people who prefer fast games because those play to the different parts of them that motivate them.
Yeah, for me it was always fast-paced video games, and then I just had to translate that into my trading. When I recognized that, everything changed. But
Yeah.
before that, I was miserable.
That's exactly, you see, it's great because you're doing exactly what you should be doing, is learning who you are and then applying that into the world of trading. And you will only go deeper as you do more and more of that. How you manifest yourself in your trading is like the tip of the iceberg that appears above the water. There's 90% of the iceberg below the water, and the more you can start to become familiar with and understand that and learn about that 90% below the water, the better you'll be able to bring yourself to the job. And you may only know 10% of what's below the water now, but over the years, as you do more and more of that, you go deeper, you might start to understand how you can apply yourself better and more effectively and more productively in ways that increase your returns and your performance.
All right. I should book a session with you.
That's why what you guys do is your journaling tool. Because there's few things that you will learn. It's like it's like having a video on you as a sports player. So you can review afterwards and look back at your game. And if you're a tennis player and you have that video of where you were positioned and where you received the serve, or what your action that you're not seeing when you're doing it, and you can look at that and you can take that feedback and try and think, how can I improve that and incorporate that into my game to get even better. So your journal, you can't have anything like that trading, but a journal is almost the closest thing you'll do to get to that. And the reviewing of the journal.
I guess when we come back to the beginning, have wrong expectations about what trading is, and traders don't want to put in the time. They think they only need to look at the charts, and then they avoid this time away from their charts. They don't like to look at their trades. Maybe it's a avoidance where they don't want to confront what is actually happening. That's what I often think as well. I often see it when the trading goes bad, and suddenly the journaling stops, and then it's hard to pick up. So I think there's also that component, right?
Yeah. It's and there is an element of that. Sometimes when you have a bad day, you just want to get away. You don't want to do the writing. You don't want to do the hard stuff, the stuff that really matters. See, that is the difference. And the same with good days. Sometimes people can't be bothered. I had a good day. It's just as important to sometimes note what happens on a good day as a bad day, because there's such value in there. That's what the very best do. And it's a constant review. I'm reading a book about my sporting hero at the moment is Novak Djokovic, and I'm reading a great book about him. And there's a part in the book I've just read where one of the other players says about Novak, he says, Novak stretches for 90 minutes for practice. I don't even stretch for 90 minutes before a match, which means he practices better than anyone else. So which means he's going to come to the game better than anyone else. And that's why he's the GOAT. And that's what makes him not just the greatest, the longevity to be able to do it for so many years. He's always thinking, how can I be the best? What do I need to do to be the best? You asked me a question about what elite traders do. They do that as well. What do I need to do to be the best? I'm just not going to turn up and look at the market and start trading. They do the extra. They go the extra mile, the hard yards. They do the journaling. That's what they do. The equivalent of the journaling is the equivalent of the stretching is the journaling. equivalent of working with a coach and reviewing what you're doing with a coach. That's what the great do. That's what gets them to the next level, not the strategy they're using. The strategy's already there. It could already get them to the next level. What is stopping them using that strategy or finding a strategy that's even better?
Yeah, I watched the Netflix documentary about the tennis players. What's it called?
Point Break?
Yeah, right. And it was so fascinating how often they talked about the mindset and how they get into the right mood before the game. They need to be relaxed and open but focused. And they spend so much time on just talking about the mental state that they need to get into. Because they all said, we all know how to play tennis. It's just about how you go into the match. What's your mindset there? It was fascinating.
Yeah. And what Novak does, it's different though, is he monitors and manages that all the way through the game. So if he's having a bad game, he checks in with himself and okay, what's going on here? He'll ask that quick, got to get myself back to that mindset, which a lot of others don't. But, it's in my book, I talk, I don't know if you saw the model that I introduced in the book, which I take my clients through when I work with them. It's a model for how to be optimal when you're trading, how to be optimal throughout the process, how to be optimal in advance of it, in preparation for it, how to be optimal in the production process, which is where, you're following the market, you're constructing trades, and you're coming up with ideas, and you're building plans, and you're deciding whether you're going to execute or not. And then you've got another part, which is the performance part, which is the third quadrant of this model, which is actually when you're in the trade, because you become a different person again. In the trade, you become highly emotive, your ego gets triggered. You can't help it, unless you're a robot. You're human, and you're going to have emotions that are getting fired when it's making money and doing well, when it's not doing well. And then you've got the final part, which is, to me, that's the most important part of any trader's routine. You might think at this point, I've described preparation, planning, execution, management. There's a fourth part to this process that I talk about in the book, which is called letting go. Most people don't engage with that. Most people don't know how to do it. Most people don't do it well. When I work with extraordinary traders, they don't realize they're doing it, but they're doing it. I realize that with all of them. They're masters of letting go. It's the final part of the process, the mental process. Then you can move on and do the next one. And letting go doesn't mean just letting go of bad outcomes. It means letting go of good outcomes. Because when you have a good outcome, like you say, you're going to be overconfident. You're going to think, you're a genius. You're going to think, I don't need to do the prep and everything next time. I'm too good. So the letting go part is where the game is won. That's the final part.
Would you say that the journaling and reviewing helps with letting go of a big trade, losing, winning?
100%. I can tell you, I've got my own journals from my trading days stacked. I used to write them on A4 pads in those days. We didn't have computers. I used to use a feather to write. I got myself in a very bad trade one year, and it was actually probably my best ever year. It just shows that even good years, you'll have bad periods. And I got myself into a big hole, and everything was going wrong. And that period where every trade you do, doesn't matter what happens, it goes wrong. You execute it badly, you mess it up. And I was sitting there beating myself up. And I then did something really stupid over an FOMC meeting, which just exasperated everything beyond belief and dropped a lot of money. And then the market move that I was hoping was happening without me on board. So it was like everything possible that could go wrong was going wrong. And then, of course, I just exasperated it even more by just trading badly to try and get in on it and make the money. But everything you could imagine was going wrong. And I was beating myself up really badly. I turned in on myself. I wasn't talking to anyone around me. I was in the trading room. I was kicking the cat when I got home. Yeah, we didn't even have a cat actually at that point, not yet. But if I did, I'd have kicked it. And this went on for about a week or two. And I was fuming because I would have made a lot of money if I'd have just stuck to my original thesis and the trade that was on that thesis. I pulled out my journal one day. It's down there. And I just started writing. And I wrote 3 pages of notes. It wasn't just about what I did. It was about who I was, how I trade, my process. I did it in about 5 minutes. And it was so cathartic, writing it down. Suddenly, everything cleared. Everything became clear in that moment. And I just said to myself, what do I need to do? And then I said to myself, is this trade still on, the original one that you had? And I went, yes. Actually, it might even go further than I originally thought. Okay, now you need to get back on it. You need to find an entry point. You need to work out your size. You need to find a stop. And I put it on, and it became a brilliant trade, and I made a lot of money on that, and it ended up being a really good year because of that. I can honestly tell you that had I not taken that journal out and started writing in it in depth, okay, then that money wouldn't have been made. Journals are just so powerful. It's just one of those things. It allowed me to let go. That's what that did, writing in there. And when I look back on it over the years, I can see what I wrote. And it was almost a definitive sense of what it is I no doubt I do now, to let go. It's not always that easy to let go. Sometimes it can take days, weeks, or even months when it's really bad. But I managed to let go of that pretty quickly. I find letting go of losing much easier than letting go of winning, by the way. I managed on that occasion to do that, and it was brilliant. It's just a great example of what journals are. And I did do journals for most of my life. So it was very powerful when I found them.
Yeah, there are lots of great journaling practices, just letting go of the morning pages or things like that, where you just release everything that is stuck in your head. And what helps is that you have a little bit more of a distance to it, and you get it out and you can review it. Like, does it actually make sense? A lot of people are always beating themselves up in their mind, but you get it out and then you see, okay, does that make sense? Should I talk to myself like that? What can I learn from here? Just getting it out there is so helpful. That's why in Edgewonk we have this written diary part. Before we were previously we were just about data, but we have expanded to give traders some room where they can just drop all of their thoughts in there as well.
Yeah, feelings. All your thoughts are really just sort of you putting your feelings pretty much into words. That's what they usually are. So, if you can download that into some sort of document, just that act of downloading it is clearing the head. But I talked about that being a very cathartic process. So the journal itself, having the ability to look back at what you're doing is one thing, but also having the ability to just download what's going on in your head can actually do the clearing of the head work for you, the letting go part for you, the getting clarity. Sometimes you're just stuck in that place. Everything's stuck in your head.
Totally. Stephen, I think we have only covered like 10% of what I wrote down, what I would like to ask you about, but it was super fascinating. I want to be mindful of your time. So I want to thank you. It's always a pleasure talking to you. It's always fun. The time flies. So thank you for spending the time for our audience. Everything about Stephen, his Alpha Mind podcast, Twitter, the book, everything will be linked in the YouTube video and the show notes, wherever you're listening, in the description below. If you want to check that out, and highly, highly recommend it.
Wonderful. It's always a pleasure to speak to you guys. I've got huge respect for the work you've been doing and the work you've done over the years and your own approaches to trading. So, like I said, honestly, I've really enjoyed talking to you guys. You've been our guests on the Alpha Mind podcast a couple of times too. And hopefully we'll revisit that at some point as well.
I'm sure we
I hope
will.
so.
Yes.
Okay.
So thank you again, and talk to you next time.
Okay. Best of luck.
Thank you.
Thank you. Bye.